Well, welcome to another episode of Break Away from the Rat Race. And today I have the pleasure of speaking with Mariusz Skonieczny. He's the founder of Classic Value Investors. He's also the author of 11 books on the different investing method or subject of investment. Mariusz is graduated from Indiana University with a finance degree. And for 5 years after graduation, he worked in commercial real estate as an appraiser and a broker. During the 2000 and 2009 financial crisis, he left that industry and started Classic Value Investors. Mariusz is a professional investor, which means that he invests his own money to make a living. And in 2009, he started with $10,000. And by 2019, his account reached $1.1 million. And now in 2021 or last year, his accounts reached $7 million. Mariusz also shares his investment ideas on Microcap Explosion. Microcap Explosion is actually a private membership website where Mariusz shares his investment ideas. Mariusz, welcome to the show.
Thank you, Eric.
So this is quite the transition. So you were interested in real estate and because you worked as an appraiser, as a broker, and then you decided that the financial crisis that, you're going to leave all that behind and you're going to be a professional investor, starting with only $10,000. So tell us about kind of like how that transition was like. And you must have had some kind of exposure to investing. And before doing that, nobody just starts with $10,000 and I'm going to go for it and learn on that. So how did that transition happen exactly?
Well, I think the transition was actually when I was a little kid. I was invested in money ever since I was a little kid. I wanted to be a cashier because I saw cashiers counting money and I said, I want that job. So I was always interested. I was always interested in money. I was always interested in wealth and how to grow it. And that's why I majored in finance in school. And when I graduated school in 2003, college, that was when the books on Poor Dad, Rich Dad were coming out and they were hot. And I kind of got a hold of one of these books and that's kind of what steered me towards real estate. But not because I was interested in a career. Ever since, I didn't even enter the labor force and I was already thinking about retiring and, being independently wealthy. But because I didn't have any money, I figured, hey, what's the best way to learn about real estate is go and appraise real estate, maybe sell real estate and learn that from that point of view. And so that's what led me to, real estate appraising, then brokerage. And then at first I started with residential actually, and then I wanted to move up to the commercial, but I never ended up investing in real estate. That was the goal, but I never did. What I learned during this time in real estate is that I was more interested in studying and understanding businesses. And real estate was just one type of a business that I wasn't too passionate about because it was, capital intensive. It was just one type of business. And during the time that I was in real estate, I was studying everything I could get my hands on about Warren Buffett, how he became what he became, how he looked at companies, how he invested. And that's, what created passion for stock market investing. And then when the financial crisis of 2008, 2009 hit, it just suited my personality to, go towards an area where everybody is screaming and being afraid and being fearful. That was just a perfect fit for me to go into the stock market investing full time. And by that time, I had $10,000 accumulated, which came from a sale, one of the deals that we had, and that was the seed capital to go into stock market investing. So that's how the transition happened.
Wow, this is pretty. But do you have experience already investing in the stock market at this point? You just had read some things and some books about Warren Buffett and all that kind of stuff. But how did you? I think how did someone start like that with $10,000? You go in the stock market and then you invest. But it's kind of how you must have some kind of strategy, some kind of tips and tricks on how to allocate your funds appropriately so that you can minimize your risk, maximize your reward, and all of that. So any tips
Well,
on that?
I was already investing and studying companies at that time for about 7 years on my own. And to be perfectly honest, when you enter a stock market during a financial crisis, when everything is selling off, it's a good time to start. Even when you make some mistakes, you kind of get bailed out just because everything is recovering. But I would say, Warren Buffett is a great teacher, and my background in finance and accounting and willingness to truly learn how businesses operate, it was just a natural progression. And also, I tend to not be fearful of trying new things. So, in my opinion, the world belongs to those who are willing to take the risk and go for things. And even if it's too risky, just shut up and take some risk. That's what I like to say.
Yeah, and I think that Warren Buffett, I think, is a great if people want to invest in the stock market. Warren Buffett is great because he's a value investor. He looks at it like, as you mentioned, you look at it from the business perspective. What kind of business is it? The business operating properly? Are they consistent? Do they have the right management in place and all of that? Then they're thinking about it as a business, and how the stock market is valuing that particular company, that particular business. And then they can see some kind of like things that are undervalued, and then they would want to invest in that. So what was your first, when you got started, what was your first kind of investment, or the first types of companies that you looked at?
So at first I was looking at just the very well-known companies that everybody else looks at. So like, for example, Wells Fargo, Burlington Northern, or
I can see that you didn't really like those those companies. Your facial expression is saying, yeah.
Yeah, well, because but even at that time, I kind of ventured out into smaller companies, like, for example, Arcticat, which was in the snowmobile and ATVs. You see, I guess people in general are not even aware of an area, a small cap or micro cap space. That they just know NASDAQ, New York Stock Exchange, and it's all great. But you see, here's the problem that I learned. One time, Warren Buffett was asked at Berkshire Hathaway meeting what he would do if he had $10,000 to his name and he was graduating college. How would he invest that money? And he said he would go into the small cap space, obscure places, because this is where the investment industry cannot exist. There's not much competition there. As a result of this, the probability, not assurance, the probability of mispricing is the greatest in this area. And so that kind of stuck with me. And I took the teachings of Warren Buffett that there's a business behind every ticker symbol. And so if I can understand that business, that's half the battle. But then I have to be in an area where I don't have a lot of competition. And that's what made me successful over the years, is because of that area where there's very little competition. So smaller companies tend to trade on secondary exchanges. Like, for example, they're not going to trade so much on NASDAQ, but they might trade on OTC, which is over the market, or Canadian Stock Exchange, or Toronto Stock Exchange Venture. And there's not much competition there, because you have mainly two groups of investors. You have institutional investors and you have retail investors. Well, institutional investors are in the business of gathering assets under management. That's how they get paid. They get paid a percentage of what they manage. They might get a percentage of the profits, but most of the time they're in the business of acquiring assets. So if you are acquiring assets and you are managing billions of dollars, there's no way you can go out after smaller companies, because you would have to find thousands of those, and they don't exist. So you have to go after the bigger names. You have to go after the Microsofts, after the Apples, after the Teslas of the world, just because of your size. So that eliminates you from the micro cap or small cap sector. And then when you look at the retail people, retail investors. Well, what do? I mean, they chase crypto, Bitcoin, meme stocks, AMC, GameStop. They do everything. They don't even know this sector exists. So I don't have much competition from retail. I don't have much competition from institutions. It's a great place to be, and so that's a good starting point. But just because you are dealing in a smaller space doesn't guarantee you success. It just gives you a greater probability. So once I don't have competition, then I'm like, okay, let me find companies that are promising. Let me find companies that are good, because I'm not interested in trash. I'm not interested in bad companies, because I can find bad companies on NASDAQ. I don't need to go to a microcap exchange to find bad companies. I can perfectly do it everywhere else. So I focus on great stuff within a smaller space.
Okay. Well, this is a great way of doing it, and seeing I can see that this is a great strategy where you're really focusing on an area of the market that is underlooked, where you have what I would say, and we did the same actually for real estate too. Like, we were investing in big markets where they had a lot of, in San Francisco and LA and stuff like that, and then we were the small fish in a big pond, and then we basically moved to a different pond where we are the bigger fish now, and then we can invest much more successfully in the smaller pond than we were in San Francisco or LA area.
Well, and think about this. Just, it's a perfect example, because this happens in big markets like San Francisco or LA or Chicago or New York. And what's the result of this? You have to pay top dollar for these properties. Yeah. And if you go to tertiary markets, secondary markets, maybe Midwest or some other states, now all of a sudden you can get 10 caps, 8 caps, and they are not possible in San Francisco. You have to pay your cash flow is negative, and and that's what you get when you have a lot of competition.
Yeah, exactly. That's fantastic. In the micro cap though, there's a lot of kind of companies that are not that great either. Like, there's a lot of exploration company, gold exploration, oil exploration, and all of that. And how do you differentiate the crap from the good stuff?
Right. So I'm glad
obviously.
Yeah, I'm glad you said that. I would say 80 to 90% of the companies that are trading on those exchanges are complete crap. Mm-hmm. Like, you shouldn't touch them. They don't have any revenues. They are, like you said, oil and gas, gold and silver. And I'm not sure if you're aware of it, but after losing a lot of money in gold and silver miners, I actually created a playlist on my YouTube channel, Why I Hate Gold Miners, and to like warn people from this horrible, the worst industry on the planet. So anytime I see something resource in the name, something mining or minerals, I stay miles away from those companies. So first of all, the way I find the companies that I am interested in, I will go through every company on an exchange. So for example, there's an exchange in Canada called Canadian Stock Exchange. Not a lot of people know about it, but it's an exchange that's known to be an exchange that caters towards entrepreneurs. So there's about 700 to 800 companies listed on the exchange, and I would go through every single company one by one. And it sounds like a lot of work, and it is, but if you eliminate oil and gas, pharma, if they're looking for a cure for cancer, like, no, thank you. I'm sure you have one, but no, thank you. So I eliminate those companies very quickly, and maybe you narrow it down from the 800, maybe you narrow it down to 100 that have a business, that have revenues, that have something there. And from there, I'm looking for good ones. So from there, I narrow it down to maybe 20. And then from 20, I narrow it down to 5 that are solid, that, are something that I'm looking for. And then from that 5, I ended up buying 2. And so I'm looking for real companies. I'm looking for companies that have revenues. That's number one. I'm looking for companies that have high quality revenues. So in other words, if their revenues are recurring, that's better than non-recurring. If their revenues carry high profit margins, that's good. That's better than low profit margins. And I'm looking for some kind of business that has something special with it's either good technology or they have something that lacks clients in, so they have a hard time switching once they are on a platform. And I'm looking for a company that has a long runway of growth, because I am not investing in small companies just because. I'm investing in small companies that I think are going to become bigger in the future. And maybe they will become big enough that they will graduate and uplist to NASDAQ or New York Stock Exchange, where if they grow successfully, they're going to be repriced correctly. Because the good companies on those secondary exchanges, they don't get the respect that they deserve, because people that invest in those secondary exchanges, they are gamblers. I always joke about it. They like to invest in cannabis, oil and gas,
that's right.
silver, pharma. So I joke about it that they get high on pot and they're looking for gold. Yeah, and so when you present them with a real companies with real revenues, they don't know what to do with those companies. So those companies don't get the attention that they should, which is, again, music to my ears, because this is what I want, and I want as little competition as possible. So I get so little competition from the people that are on those exchanges, and I get so little competition or non-existing competition from people that invest in NASDAQ and the regular exchanges. But that's exactly what I want. I want to identify them so early. I want to study them when nobody knows about them. I want to get a huge position in them. And then when they grow and deliver and get uplisted to a better exchange, then I welcome exposure and everybody knowing about them, because I already have a huge position.
Oh yeah, well, that's excellent. I mean, I'm looking at your strategy here, and it is somewhat reminiscent to value investing and Warren Buffett, but like about having recurring revenue, solid recurring revenue, good profit margin, where you have some kind of either a loyalty, or you're kind of in a very dominant position in the market. This is very good.
It's called a moat, and I also of course stole it from Buffett. And a moat is a protection. A business can have a moat, like, for example, it could be a brand name, or it could be a patent, or it could be switching costs. And because in the capitalistic society, when somebody is successful, competitors want to come in and take that success from you. So if you have a business that has some kind of protection, like, people sign up and it's hard for them to switch, or they don't want to switch, then no, it doesn't matter what the competitors come up with. The revenues are somewhat protected, and I like recurring revenues, because then I know that every January we don't start from scratch. And it's easier when you have a recurring revenue model. It's easier to grow revenues because you just add on top of what you already have. And yes, of course, you might lose some, but it's a lot better than losing 100% of revenues every year and starting from scratch. Those businesses that are non-recurring, they don't interest me that much.
Yeah. So tell me about, so many people invest in cannabis. So why don't you invest in cannabis? It seems like, the profit margins are fantastic. And so why should people be a little bit more skeptical about the cannabis industry?
Well, I have a friend actually that her son is in cannabis. And when he first time got his license to grow, the whole family was so excited. And this lasted about 2 months. And then they didn't think it was a great idea anymore. Cannabis is a tough business, because first of all, the biggest competitor that you have is illegal growing. Second thing is the winner that wins is the entity that has the best equipment. So the business itself is capital intensive. And then everybody and their brother wants to grow it. So you have a constant increase in supply. And when supply increases, there's a lot of pressure on your price, on your revenue. And your revenue, you're selling a product that's unlimited in supply. And also that product is not really branded. I mean, yes, you can say, oh, we have this, premium branded cream or this, like, yeah, stop with that nonsense. It's all, commodity. And also, when they fully legalize this thing, you will have pharmaceutical companies. You will have cigarette companies that are gonna have more money, more capital to throw at the equipment. It's just not, it's not great economics from that point of view. So yeah. I wish everybody the best that is in this space, because you need all the luck you can get, but I will prefer to go somewhere else.
Yeah, it is. I mean, I talked to, there's a friend of mine that was interested in doing that. He was interested in building a farm up in Canada, actually. And yeah, I mean, we looked at the numbers, we looked at that. It's like, it was not that good a business. It cost so much money to just build that greenhouse, to do this, the air supply and all of that, and finding someone that would grow it at, properly and all of that. And then there was a lot of waste associated with that. There was a lot of risk involved. So it was not as easy as it sounds. It sounds like, oh yeah, you're just growing a plant and then but that it is a little bit,
it never ends. So yeah, you grow this whole thing to generate certain margins, and then your product gets cut in half in price, and then you have to put more money into it to protect your margins. It's just not the recipe for success.
And as you mentioned too, the branding. I mean, we talked about having a moat and stuff like that. Once you produce a special one kind of cannabis, then everybody can produce it. It's just a plant, and then there's no branding. I mean, you just put that in this envelope or this envelope, and you put a name on it. There's no barrier to entry. You have a little bit more maybe on the edibles and these kinds of things, because you can really manufacture them a little bit differently and package them. But yeah, it's the barrier to entry, or the moat for these businesses, is pretty weak. It's pretty easy to break down, and eventually they're either going to be bought out by, that would be the best scenario, bought out by pharmaceutical, or the worst case scenario is that pharmaceutical would start their own, and then they would just crush them almost immediately. So yeah, okay, right. Makes sense. But yeah, this is all the hype. Do you do any kind of like crypto investing, digital currency?
Well, the thing with crypto is that when I invest, value is what you get, price is what you pay, or price is what you pay, value is what you get. I have no idea what I'm getting with crypto. I know the price, the value. How am I supposed to know what I get in value? Because some YouTuber or somebody writes an article that Bitcoin is going to go to 200,000. That's not good enough for me. Again, good luck to all the people involved in it, because you need all the luck that you can get, but that's just not something that I want to be involved in.
Yeah, well, that's excellent. So that sounds very good. So what kind of, are you specializing in any kind of industries in these small stock exchange, or you just look at basically all of them that have a real business, and then you start doing your own work about understanding what the market is for that business? So you mentioned Arctic Cat, for example, which is basically kind of like the jet ski. They have like jet skis, and they have all kinds of four-wheel drives, recreational four-wheel drives and stuff like that, and snowmobiles and stuff. So do you do any kind of, like, do you look at that and say, oh, this is a real business, let me look into this, let me understand the market, the dynamics and all that kind of stuff? Or you go into that level of details?
Yeah, I mean, I will look at any business that I think I can understand. If the economics are good, if there's some moat, if the quality of revenues are good, then I will look at it. And so let me give you an example of a company recently, because your audience is knowledgeable about real estate, so they will be able to relate to this. So about 24 months ago, I went through every company on Toronto Stock Exchange. So I think it was like 3,000 companies. And I found this company called Voxtur. And at that time, it had a different name, but for right now, let's say Voxtur, VOXTUR, and the ticker symbol is V like Victor, XTR, VXTR. And you see, I had something special there, because I said in the beginning that I was a real estate appraiser. So this company, what they identified was that there's a problem in the real estate space. Appraisals take too long and they're too expensive. They are the bottleneck of the real estate transaction. They create a lot of stress for the broker, for the owner, and there's not enough appraisers. The average age of an appraiser is about 62 years old. And I know that because I've been in that industry, and usually people don't go into that industry right after college. So it's like a second career. It's either they go and sell candles or essential oils, or they go into appraising. And they're not really like a technologically advanced type of people, you know? So this creates a problem for the industry. So that company was solving the problem, and they developed this platform that makes appraisers faster. And that platform started to take off. One of the biggest players in the industry are signing up on the platform. And one example is UWM, United Wholesale Mortgage, signed up for the platform in order to speed up the process. And now they have, major banks that are signing up for it. But they have another division that, because they have appraisal division, they have a tax assessment division, which helps tax authorities calculate taxes. And they have foreclosure division, where they have banks help with their foreclosures. And then they have this newest division, the title. And what's so interesting about this division is that in the title, the biggest cost contributors to a real estate transaction are appraisal and title. And for low-income Americans, the closing costs, and this is a study by Fannie Mae, the closing costs can be higher than the down payment. And that's really a problem. And title insurance is like a scam. And here's what I mean. When you have a regular insurance, health insurance, car insurance, you pay a monthly fee, and insurance companies collect premiums, and they base their premium pricing based on probabilities, and about 80% of premiums are paid in claims. In title, only about 3% is paid out in claims, which means it's like stealing money from people that are buying homes. So this is problematic, because this unnecessarily increases the cost of real estate transactions. Well, this company, Voxter, 2 years ago, started talking about a different product called attorney opinion letter to be used as an alternative to title insurance. But just because you have a new product doesn't mean it's going to be adopted, even though it might sound great, because title insurance might cost you $3,000 depending on your the value of your house. And an attorney opinion letter as an alternative can run $500. But mortgages, when they get originated, the originator doesn't hold the mortgage on their books. They originated and they want to sell it to the secondary market. And in order to sell it to the secondary market, that loan has to meet all those guidelines. It has to check this, and this. It has to be standardized. And then if it meets that, then yes, it can be sold. So until the attorney opinion letter gets accepted and added to those guidelines, it will never be used, because then they cannot resell those loans on the secondary market.
Yeah.
April 6th, which is last week, Fannie Mae approved attorney opinion letter as an alternative to the title insurance. And it is an absolute tectonic shift in the title space. And most people in real estate have absolutely no clue that this happened, because the document had 1,000 pages long, and there was only 2 pages about that. And title companies were caught by surprise that this is what happened, but it happened. So now this is being rolled out in 4 states, and it's going to be rolled out in all the states. And so now people will have a choice. Do I use an attorney opinion letter, which costs me $500, or do I use title insurance that costs me $3,000? I think the choice will be obvious. And what's so unique about this is that Voxter has a patent combined with data and attorney opinion letter. They are the only ones that have this product, and they're offering this product to lenders and buyers, and they're also going to white label this product to title companies who don't have the technology. And, of course, they're going to share their revenue. But from my point of view, because I'm a shareholder of Voxter and I identified this opportunity so early on, and I have about a little bit over $1 million invested in it, I literally think I will make $20 to $50 million on this opportunity when this starts getting rolled out, and people are already slowly, it's been a week and the stock is already up quite a bit, because about 30% in 5 days based on that news. And I think it's because people are slowly starting to learn about this company, because this company is not on NASDAQ yet. It's going to be on NASDAQ either at the end of this quarter or next quarter. And people are slowly starting to realize what just happened with attorney opinion letter. And when they finally realize how monumental this is, the stock will probably continue going up. So this is an example of how I was able to identify something very early on, do my research, and this research turned out to be correct. And now I'm reaping the benefits of that research.
Yeah. And Voxter is on the Toronto Stock Exchange, you said?
It's trading on Toronto Stock Exchange Venture, which is like a sister of Toronto Stock Exchange. Right? But you can buy the shares, normally. You can buy those shares on the Canadian exchange under the VXTR, or you can buy them on OTC under the ticker symbol VXTRF. Last letter is like F, like Frank. And one is in Canadian dollars, one is in US dollars. But obviously, when the stock trades on NASDAQ at the end of this quarter or next quarter, then you will be able to buy it the same way you buy any NASDAQ stock.
Yeah. Well, this is very interesting. So not only because it's real estate related, but for all the real estate investors out there, this might be good news when they're trying to finance their property. They just it would really cut down on their closing costs. I'm glad you mentioned this, because I personally bought a house in 2014, and after I bought it, interest rates went down a little bit. And I was thinking about refinancing. And I looked at the closing costs and I said, forget it. Like, it's not worth it. So when, Fannie Mae and HUD, what they want is they want the closing costs to be lower. And so they are addressing that issue by allowing, for example, desktop appraisals to be done. Instead of full-blown appraisals. They're addressing the appraisal costs, and now they're addressing the title or closing costs. And Voxter is kind of like in the middle of all of it, but it's a company that provides a solution to the problem that those authorities are trying to solve. So anytime you have a company that solves a problem that needs to be solved, and if you're the owner of that company and you successfully deliver that solution, you should be rewarded for that resolution. Yeah, no, that's excellent. That's true. I mean, this is where a lot of people are, when they're talking about starting a business and stuff, they don't focus enough about what problem are they trying to solve, what are they trying to do, why would people buy from them, or why would they, hire them to provide a specific service. You have to solve a problem. And that's true. I mean, being in the real estate business for so many years, title insurance is a big one. The appraisals is also a big one. Not only the cost of the appraisal, which is sometimes pretty reasonable in general, like about $400, $500. That's about $800. But also because the appraisals are so inconsistent. You have two appraisers go through that same property, and there would be like 40% difference between the two appraisers. Sometimes it's just ridiculous. And then so in these cases, I mean, we know our markets very, very well. We know the value of the properties, and then whenever we have a low appraisal, it's like what's this guy smoking? And then we rebut the appraisal, and then we have to pay another $500 to get another appraiser go through, and then we get the price that we're looking for, that we think it's the correct price. But so these are two big things. So if Voxter is successful in deploying in the US market, that'd be very beneficial for Voxter, for you, Mariusz, but also for real estate investors as well.
Yeah, and it's not like this little dinky company that they already have $200 million of revenues per year. So it's not like, oh, we have this product that we're hoping it will be successful. No, it's already happening.
Yeah.
Now we're just talking about, will the revenues be, 200, 500, or a billion within a few years? But we're not talking about a startup here.
Wow, no, excellent. Very good. So a lot of concerns about the stock market in general. Where do you think the stock market is going to be in the next year, next 2 years? Any projections? Do you care? Does it matter to you?
I don't, because I always say to people, right now, the questions that you get from people is, oh, is the recession around the corner? Is the housing market going to crash? Should I be buying stocks? Should I be waiting? And I say, last time you asked this question was in 2008, 2009, and 2020. How did this turn out when you were asking this question? I'm not interested. Like, I am interested in buying businesses. And when people ask those questions, and when people tell me a recession is coming, I am more likely to get those businesses at a decent price. Because if the seller is freaked out about the next recession, he's likely going to accept a lower price. But this is just a weirdness about the stock market. Yeah. It's so weird, because when was the last time you went to your restaurant owner and said, can you sell me your restaurant because the Fed is going to raise interest rates 2 times this year? Like, we don't think about these things in the private world, but in the stock market, it's ridiculous how everything is 3 inches in front of people's face. I don't worry about it. I worry about, I want to own good businesses for my whole life. I want to be an owner of businesses, and I'm going to accept the volatility, because volatility is part of the price that I have to pay for being successful.
So your strategy, so you're a long-term investors in these stocks. You're not like are you trying to do are you trying to do anything short-term, or you're really a long-term value investor?
No, because any success within these small companies, when they need to grow bigger or disrupt a certain industry, like with the case of Voxter, nothing happens overnight. Yeah. Like getting every client takes months, and with anything, like any success, whether you want to lose weight or become a champion or master a skill, it takes time, takes years. I take the same approach with investing. If I can't hold something for 3, 5, 7 years, I don't even bother buying it. I don't have any interest in holding something for 3 months.
Yeah. And this is why you're not concerned about any kind of ups and downs in the stock market, because you're really looking 5 years down the road, and you're going to be fine 5 years from now.
Yeah, and when you read my bio, it says I started with 10,000. By 2019, my account reached 1 million, and then 2021, 7 million. Well, now I'm down 3 million. Mm-hmm. So it went from 7 million to 4 million. So but that's normal, because during the time, the last 12 years, it started with 10,000. It went to 110. It went to 40. It went to 70. It stayed at 100,000 for so many years. Then it went to 40. Then it shot up to 1 million. Then it went to 300. Then it went to 7 million. Now it's 4. It's like volatility is insane in the kind of stocks that I hold. It's absolutely insane. So, if you want to be successful, if you want to make a lot of money, you have to have the stomach for this kind of volatility. This is the price you have to pay. If you don't want to pay this price, then buy an index fund, put your money in the savings account, and you will be able to sleep well. But sleeping well is not going to make you rich.
The other thing too is that, so obviously you're an inspiration for people that want to achieve financial freedom. They want to basically live off their investments, whether it's real estate investment or stock market investment. So how do you manage your money so that you can have income on a regular basis? Do you have is it a budget thing, or is it like or do you sell a certain percentage of your asset on a regular basis to pay for your living expenses? How does that work?
So I have different products that I release. So that actually helps me with investing because I am myself an entrepreneur that sell products. So for example, I have 10 books that I wrote. Those books generate revenue. Those books generate enough revenue to cover my mortgage.
Okay.
I have Microcap Explosions, which is a private membership website, microcapexplosions.com, where I share my investment research with people and they pay me a yearly fee. So depending on the year, I started in 2020. We have about 300 members. So I make close to $500,000 from that. So that's enough that I don't have to really touch my investments. But from time to time, when I see an opportunity, whether it is to have like, a product that instructional product or videos, I make some videos from on my YouTube channel, and I have my channel monetized. So I make a little bit of money from that. So all of it adds up that, I don't really have to do that. But, so that's how I am able to pay bills.
And you also have like Value Investing University, right?
Yeah. So valueinvestinguniversity.com. I used to sell it. I used to sell the course. It's like a 10 video course teaching you about investing. I used to sell it for $500, but recently I just made it free.
Okay.
Because I want people to really educate themselves. So I made it free. People can sign up for an account and have access to it. I think it's better for me to society because I wasn't really selling that much of it. So I was like, you know what? Let people get educated because there's enough stupidity out there, with the meme stocks and all this. Like, hey, if I can open up people's minds and say that, stocks are not just some video game, if I can change a few people's lives, it means more to me than just getting a few $100s here and there.
Yeah. So basically you generated like a number of like multiple streams of income to pay for your living expenses. And then your stock market is just like play money, basically.
Yeah.
So Mariusz, it was a pleasure speaking with you. Anything else you want to mention before we wrap up?
Yeah. So if you like the philosophy, if you want to follow my work, you don't have to buy anything from me. Just go take the impossible to pronounce my first and last name, type it into YouTube. You'll find my YouTube channel, and I do daily videos. Just, I do talk about some investment ideas on YouTube channel, and I, try to educate as much as I can, and that's free. So, if you're looking for something like this, I would start with a YouTube channel and then, go from there.
Yeah, YouTube channel, and then you also have Value Investing University as well. That's free.
.com. Yeah.
.com. And then if you have like 11 books, right? So which book, the one book you would recommend out of your your series that do you think people should start with?
The first one, Why Are We So Clueless About the Stock Market? That's the title.
Very good. So thank you very much. And then, and then after that, if you like what Mariusz had recommended and his approach and his strategy to stock market investing, you can follow him on the, or subscribe to his Microcap Explosions. Microcapexplosions.com. So this sounds great. Mariusz, thank you very much. Really appreciate your time.
Thank you for having me.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.